Hi, you're much welcome to your favorite Cryptos for You. Today's topic is cryptocurrency mining. Mastering the hardware hustle. What are the essential hardware requirements for cryptocurrency mining? Cryptocurrency mining is an increasingly popular way to earn digital assets, but there are some essential hardware requirements necessary in order to be successful. To start with, the mining rigs require a powerful GPU for optimal performance, typically AMD or NVIDIA graphics cards that have at least 4 GB of memory. In addition to the GPU, a CPU is also needed, along with adequate RAM and an adequately sized hard drive, preferably with enough space for multiple operating systems and wallets. Other components like fans and power supplies should be selected according to one's intended usage level. These items can range from standard desktop parts to specially designed cooling systems. Miners must also consider setting up networking equipment such as routers, modems, and cables if they intend to operate their rig remotely. Each of these pieces of hardware play an important role in determining success when it comes to cryptocurrency mining. Contents: benefits of cryptocurrency mining, possibilities with hardware, zero risk investment, power consumption concerns, exploring mining strategies, pooled or independent mining, long-term profitability, the dynamics of the market, high-performance software solutions. The takeaway: discover Trade Dork. Benefits of cryptocurrency mining. Cryptocurrency mining is increasingly attractive to individuals and businesses due to its numerous advantages. Perhaps the biggest draw of cryptocurrency mining is its potential for generating a steady income. If you own a setup that can effectively mine digital currency, you can be rewarded with coins as long as your hardware continues to perform optimally. Miners have the option to sell their newly minted coins on exchanges for either fiat currency or other altcoins depending on their needs. Cryptocurrency mining provides users with an opportunity to diversify their portfolios in a highly profitable way. While there is always inherent risk associated with any market investment, crypto miners are able to reduce this risk by choosing different types of digital currencies and /or mining pools if needed. By having multiple streams of income coming from various sources at once, crypto miners are able to minimize losses while maximizing profits over time. Cryptocurrency mining has the added bonus of providing privacy when transacting with others online. Although transaction records still exist on the blockchain ledger system, those records do not contain identifying information, which means they cannot be linked back to the sender or receiver without additional cryptographic processing power that very few possess today. This makes it difficult for outsiders, e.g., government agents, to trace transactions or impose taxes on them, making the whole process relatively more secure and anonymous than traditional payment systems such as banks and credit cards companies, which can subject users' personal information to data theft or misuse when hacked into. Possibilities with hardware. Cryptocurrency mining requires a substantial amount of computing power in order to solve complex equations and generate blocks of transaction records. This can be achieved through specialized hardware built solely for the purpose of cryptocurrency mining, also known as mining rigs, or with more general-purpose computers, which may require additional components for increased efficiency. Mining rigs are typically composed of several dedicated GPUs, or graphics processing units, each with its own processor and memory setup to handle processing algorithms in parallel. This approach allows miners to achieve greatly improved speeds when compared to regular CPUs. By running multiple computations simultaneously, miners can further boost their performance by connecting multiple cards together into a single rig. This technology is often referred to as rigging up. Through this technique, miners can achieve much higher levels of hash rate and total computational power than would otherwise be possible. Outside of the realm of dedicated hardware, it is also possible to mine cryptocurrencies with regular desktop computers. However, this method is not advised due to limited potential returns relative to specialized rigs. For those looking into starting a home-based mining operation without significant investments in hardware components, cloud-hosted mining solutions are an attractive alternative. These services offer powerful pre-configured pools for users to rent out specific amounts of hashing power and receive payments in return. Zero-risk investment. In cryptocurrency mining, there is no surefire way to guarantee success or a zero-risk investment. However, there are certain safeguards one can take when assessing the essential hardware requirements. To start with, the miners should examine not only the costs associated with purchasing the necessary mining rigs and components, but also their durability and longevity. This includes researching into both existing models and newer versions that might be released in order to keep up with competition. Moreover, it's wise for any miner to research what benefits each specific make and model of equipment offers over others on the market, such as improved hash rate capabilities or lower energy consumption rates, before making a purchase decision. Miners should also consider if their chosen hardware can support different types of cryptocurrency so that they don't miss out on future trends in digital currency prices. In addition to this, miners should keep an eye on emerging technologies like AI systems, which could disrupt established cryptocurrencies by creating more efficient ways of data processing or faster transaction times. By taking these precautions during hardware selection, miners can reduce some of the risks inherent in cryptocurrency mining while still achieving their desired returns on investment over time. Power consumption concerns. Cryptocurrency mining requires significant hardware resources, and these require power to operate. Most miners will need specialized power supplies with adequate wattage output for all components. To determine how much power is necessary, it is important to know the total hash rate of all connected miners or mining rigs. This hash rate will ultimately determine the amount of energy consumed and consequently indicate potential environmental impact from cryptocurrency mining activities. It's also essential to ensure that any dedicated hardware runs at optimal levels by checking voltage stabilization regularly. Voltage fluctuations can not only affect a miner's ability to generate profits, but can also damage critical system components over time if left unchecked. If necessary, appropriate cooling units should be deployed to maintain acceptable temperature levels within a given system in order for operations run smoothly and efficiently throughout long-term usage cycles without incurring damage or excessive energy consumption due to temperature-related problems caused by overheating. It is also vital that certain safety measures are observed when setting up high-powered systems, including careful electrical wiring installation, properly rating fuses, as well as ensuring there are no leaks in sockets, plugs, or cables, potentially resulting in dangerous scenarios like electric shocks or fire hazards due to exposed contacts being short-circuited on contact with nearby objects or liquids inside the operating environment. Exploring mining strategies. Cryptocurrency mining can be an incredibly profitable venture for some, and it's becoming easier to enter the market as the difficulty and competition increases. However, in order to maximize earnings potential, miners must understand a few strategies that will help them get ahead. Mining rigs come in all shapes and sizes and are built for different purposes. Miners who are interested in potentially earning more need to choose equipment carefully based on their setup and goals. Different hardware components such as CPUs, GPUs, motherboards, memory cards, power supplies, and cooling solutions should be chosen depending on the type of coins being mined and desired hash rate output. In addition to hardware selection, miners must also consider how they will pool their resources with other miners to increase mining efficiency while reducing fees associated with traditional pool mining options. Newer strategies like cloud mining have also become popular among those new or unfamiliar with mining operations due to its lower upfront cost compared to buying one's own hardware setup. With all these factors taken into consideration when selecting a mining strategy for cryptocurrency operations, profits may greatly vary from operation to operation, but stand great potential if chosen wisely. Pooled or independent mining. Cryptocurrency mining is a process that can take place independently or as part of a pool. In independent mining, miners receive rewards for solving cryptographic puzzles with their own computing resources and setting up their own software environment. By contrast, pooled mining involves miners joining together and sharing their computational resources and electricity costs in exchange for an equal proportion of the rewards generated. In terms of hardware requirements, independent miners must have powerful computing rigs in order to successfully compete with others on the network. They will also need access to plenty of energy at competitive prices so they can cover the cost of their electricity bills. This means these types of miners must be prepared to invest heavily upfront in order to get good returns down the line. However, they are free to develop different strategies, such as overclocking or using custom ASICs or FPGAs, which can potentially help boost profits from mining. Pooled mining has lower initial costs than independent mining because there is no requirement for specialized computers. Any normal desktop computer may be used, since the miner's chance of solving the next block is determined by their share hash power, i.e., how much total hash power they contribute. However, this type of setup requires miners to sign up at one of many well-known pools like Mining-Pool Hub or AntPool before being able to start competing against other participants on the same network and receiving a smaller portion due to split consensus among members. Long-term profitability. For cryptocurrency miners looking to maximize profitability, it's essential to understand the long-term considerations involved. The right hardware is one piece of the puzzle. Other factors such as energy costs and overall market conditions can also play an important role in your mining income. The type of hardware used will determine a miner's electricity costs and hash rate, that is, the speed at which the crypto algorithm can be solved. High-end GPUs typically provide the most efficient solution for crypto mining. However, these may come with higher upfront costs compared to more cost-effective but less powerful models. ASICs, application-specific integrated circuit, are usually more power efficient than CPUs or GPUs, so it's worth doing some research before investing in any equipment. It's crucial to consider both ongoing operational costs and potential future growth when assessing long-term profitability for a mining operation. It's important to factor in changes in network difficulty, block rewards, conversion rates from cryptocurrencies into fiat currencies, e.g., USD, time spent troubleshooting hardware issues, and opportunities that might arise through joining a pool or forming cloud mining contracts with third parties. Ultimately, there are numerous variables that can influence whether cryptocurrency mining makes financial sense over an extended period of time, but savvy miners should always keep their eye on these details while aiming for maximum profitability. The dynamics of the market. With the cryptocurrency market becoming increasingly saturated, understanding the dynamics of the space is essential for successful mining. Supply and demand are key drivers in setting prices, as miners compete to offer cheaper products or services on the open marketplace. Comparing different hardware components side by side can help miners determine which solution offers them the most value and highest potential return on investment. The price of a particular piece of hardware can be heavily impacted by factors such as its energy efficiency, scalability, ease of integration, and longevity. With these variables in mind, it's important to do thorough research before making any decisions about what hardware to invest in. Cryptocurrency miners should also keep an eye out for emerging technologies that could potentially provide improved capabilities over existing solutions at a competitive price point. When choosing amongst different types of hardware, it's worth noting that mining rigs will differ greatly depending on what coins are being mined. ASICs, application-specific integrated circuits, are generally considered more suitable than GPUs, graphics processing units, for Bitcoin mining due to their increased power efficiency, while GPUs may provide greater speed when solving more complex algorithms required for other altcoins such as Ethereum or Dashcoin. High-performance software solutions. In recent years, high-performance software solutions have become an indispensable tool for miners to successfully build and maintain their cryptocurrency mining rigs. Mining in the crypto space requires a sophisticated arsenal of specialized hardware pieces, as well as powerful computing capabilities for higher efficiency rates. To increase effectiveness even further, miners need software that can optimize their rig's performance in order to maximize profits. Achieving success while mining is determined by several factors such as hash rate and profitability levels. In order to acquire maximum returns on investment, users must access accurate information about the most profitable coins and use specialized software applications capable of delivering precise metrics. This type of program is designed to provide both amateur and professional miners with real-time data analysis regarding the current state of the market, so they can make informed decisions in order to avoid unnecessary risks or losses. Some platforms come integrated with machine learning algorithms, which detect patterns from historical datasets and generate predictions accordingly. Understanding all components necessary to maximize any miner's chances of increasing their rewards from cryptocurrency transactions ultimately requires accuracy and precision when selecting tools for building a successful system. This includes purchasing efficient hardware devices as well as high-performance software solutions that are able to fulfill these needs at scale. The takeaway: uncover the secrets of cryptocurrency mining hardware, from the alluring benefits, diverse possibilities, and navigating the labyrinth of mining strategies, to the pulse-racing dynamics of the market. Every hardware choice is a pivotal move. Learn to balance power consumption concerns and delve into the realms of pooled versus independent mining. Discover how high-performance software solutions turbocharge your mining rig, providing a competitive edge in this ever-evolving crypto landscape. It's not just mining. It's a hardware hustle for unprecedented profitability and longevity. Thank you so much for watching this video.